morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, May 29th. We'll get a little bit of a pause in the 5-day rally that we've had in U.S. equities, basically melting up on literally no volume at all, to say the least. Stocks are still continually staggering right in these areas. And what I mean by that is that the majority is a handful of high beta names that are moving, like the Baidus and the Netflixes and the LinkedIns of the space. And then you have other stocks that gap up and then literally just fade that whole move or just continually go sideways. So a lot of stocks are not making new highs. They're actually not going anywhere, to really say the least. Or if they do, they gap up and then they pretty much stay where they are in their respected ranges for the day. So quite difficult for the day trade unless you can find something that kind of runs by your screen a little bit, and that's been kind of hard to come by the last few days, with especially the low volume. So it's a little difficult for the last few days of trading, last 4 days as the markets have been up and going into that Memorial Day weekend. However, I do think and I do suspect that the markets will be making some big moves here in the coming sessions. Remember, all you need is a couple of good trades for the week to get paid. You don't have to continue to grind out trades, and all you're doing is paying the clearing agent. So just take a step back a little bit. And markets are really funky right now, guys. I mean, the markets are painting a totally different picture. What's supposed to be moving isn't moving. What is moving, it's just pretty much crazy price boom out there that I've seen in 27 years. And why? Well, it's really the bonds, the yen, what's going on with that. And we did have that movement in the yen. I'm going to show that to you in the chart segment. We had Bank of Japan basically talking down their currency. We had weakness in the yen for several days. That helped fuel a little bit of a pop in equities. And that was pretty much it. But we have yields, and you can see this in front of you. The U.S. 10-year yield usually moves with what the stock prices are doing, as you can see here, right almost here to the penny. And all of a sudden, we started diverging from what equities and yield is. Okay, here is U.S. equities, and here's the 10-year yield. So one of these markets are going to be correct, and I mean the bond market and the U.S. equities. And as you can see, we can't have two markets going the same way. It just doesn't normally happen that way. We did have similar, when I check back on some of the history, we did have that last year, and equities kind of reemerged as the market of choice, let's call it that, and then yield started to move higher again, as well as equities. But in this case, I think something's different here. We had that last year, that whole market grinding higher all of 2013 with very little pullbacks. If you remember, now we had some volatility early in the year, and now all of a sudden bonds are breaking out, very well bid. And I must say that whatever equities are doing, bonds could care less, and bonds continue to move higher. And as you can see, the yield moving lower, and that's what it's supposed to do. But equities should be following the yield, and as you can see, this is not happening right now. We have this huge diverging market here. The yield lower and equities higher. That's not the case. So eventually, it's going to be either the yield's going to catch up and bonds are going to sell off, or equities are going to move lower to catch up with the yield. And if that does happen, you're going to see what a difference here in the spread, and that's going to put a big damper in U.S. equities. Now, it did happen. If you remember, if you were trading back in 2000, it happened in 2000 where bonds were right. Bonds are the smartest guys in the room. I keep saying that. So if bonds are correct, it happened like that in 2000 before the crash, and then again 2007 through 2009, where equity markets followed suit. Where they were supposed to go was south, and bonds continue to move higher. So you have to take note of this. This is a very peculiar situation with equities. And when we had this in 2000, markets crashed. We had it again in 2007 through 9, markets crashed. Now, I'm not saying that this is going to be any type of crash at all, to say the least. And I'm not saying that at all. But what I am saying is that you have to have your caution hat on. This is very peculiar. And when you have bonds making new highs, regardless of what equities are doing. And generally speaking, when bonds are the smartest guys in the room, you have to take note of that, okay? And then when you have equities not making new highs through our indicators, you have to take note of that as well, okay? And that's all I'm saying, and that's why it's been a little lackluster as far as trading, at least for me. But we are looking to pick the best trade setups here until this market could at least, if the equities start to move lower, that's great. Then we'll get very active selling rallies. If bonds start to sell off and equities can at least pull back a little bit to these extensions, then I will look to get active as well, buying pullbacks. But remember, I also looked at Traders Almanac that bonds are pretty much well bid up May through October, guys. So, and that also comes into a seasonal weakness time of the year for equities as well. You know, September, October, usually get this chop going into the summer. But remember, you know, summer months, light volume, so the moves are usually skewed, meaning that they usually overextended in one way or the other in the equity prices. So again, just keep an eye on this. One other thing I want to show you is the yield affecting lumber prices as well as the ITB home construction. Now, we did have some good numbers come out of existing home sales, so that popped home construction. But if you look at the yield, obviously moving lower, lumber prices moving lower as well, and we had this home construction moving higher. Home Depot reported good numbers last week, so it was pretty much well bid up. But some of the home builders are looking pretty ripe for a trade, but I don't want to buy the home builders if lumber prices are moving lower, right? Eventually, it's going to move with the lumber prices. You can see it moves pretty much in sync, one for one. And then when you had the turn in lumber here, we had equity, we had lumber, home builders and home construction move lower as well. So watch, because this could be a little bit of a trap. And that's why I'm saying you gotta have definitely use caution in what you're trading and know what you're trading too as well. Okay, so let's go right into the indexes and some of the indicators. VIX again broke 12. Extreme complacency out there. As a contrarian, you have to use caution. Okay, that's all I'm just telling you. Use a little bit of caution here until this market could realign itself. Bonds, and then here we go with the bonds. And as you can see, we have this inverted head and shoulders working out fantastically, if that's a word. We have the 1618 extension here, and which coincides beautifully with that head and shoulders target. I've shown this to you many times. We are now looking for our first extension, because we're going to take this out. We should take this out today, and then look to 1272 extension. I would be looking to buy bonds or the ETF on any pullback, and any weakness into the 20, I'd be looking to buy bonds. Okay, that'd be probably one thing that I would be pretty much confident in buying. Japanese yen. We had the little weakness in yen, fueled a little bit of a stock rally, and now we have strength in the yen the last few days. So if we could take this area out, this trend line resistance out, we're going to have this upper area resistance, this little cluster of Fibonacci cluster plus the 200-day. But if we could take that out, then I would see further weakness in equities. But again, that's a long way out. It's going to need a little bit of backing and filling, but that's what it's really doing. If you can see this here, a move up, we flagged, move up, we flagged, and now we're looking to move up again, making higher highs and higher lows. So this still has bullish symmetry here. Okay, so we just keep an eye on Japanese yen as well. Now let's go into our indexes. We're at the second extension now, guys. We're right here, 1918, 1916, give or take a few handles. We're coming into the second extension, very extended, overbought, RSI overbought, with lack of volume, lack of conviction here in equities. Okay, the transports. I think here you'll see this on the IYT. You won't see it on the transportation index, the DJT. But I think it looks like a capitulation here. Spike. We had volume come in, and if you looked at yesterday, it was so euphoric. How markets, people, I could just see that traders just chasing the transports up at these levels. Look at the distance from the 8, which usually hugs price, and forget about the 20. Look at where we are in the 20. So this here is totally unsustainable. With this volume spike, I think you have capitulation here in the transportation sector, which again would put what? pressure on equities when we have the transportation rolling over. I think at least it pulls back to the 20, at least to the 20, and then we would reevaluate it. But the IYT, if we do get some further weakness in equities today, tomorrow, that is going to be one index that I'm going to look to fade in the transportation index. IWM, still a bearish chart here. Yes, we broke this downtrend line, but to me, this is nothing more than just a big bear flag into horizontal area of resistance. We do have some confluence area of resistance, as you can see here, downtrend line, two uptrend lines that now we have to break back above it. Now, if we break back above this area, 115.30, and we can chop around and create a new base, then maybe that might be a different story. But as of right now, to me, on no volume at all, I think this is just a continuation of a bearish pattern. And lastly is the Qs. Now, the Qs, a little bit of a different story. The only thing that does not have going for it is volume. We did break back up to the upside. Some of the higher beta names actually started to move higher. Challenging the highs here. If we break back above this high on a closing basis for a couple of days, then of course the 1272 extension will come into play as the upside target. But I do think that this is a very big move in a very short period of time, and I think this needs to pull in as well as regular equity. So again, guys, this is my analysis for this morning. Remember, anything could change. Just please do your own homework and follow your own trading plan, and that would be the best way to challenge these markets here. They are absolutely disturbing in a sense, for lack of a better word, to kind of get a good analysis on. You have gold moving lower, and you have equities moving higher, and basically on no volume. Again, for a quick recap. So watch the transports today. I do think that transports may have capitulated yesterday. And then we'll see where the market goes. Remember, next week we have non-farm payrolls again, so that's going to be obviously a big factor in the trend. And I do think with the bonds moving higher, seasonal strength from May to October, and the yield prices moving lower, and with this huge spread going on, I think it's only going to be normal for the spread to tighten. And if that does happen, obviously we're going to see some further weakness in equity. So let's see what happens here. Again, the trend is your friend. Be diligent here. Trade the best trade setups. Be patient because you only need a couple trades to get paid. Remember that, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.